Hello ladies and gentlemen, I'm Joseph Novichko, Senior Trading Manager with GDM. Today's outlook, we're starting with Asian stocks. They advanced on Wednesday as recovering from the carnage in the previous session following a modestly positive lead from the Wall Street overnight. Also looking at the Nikkei 225 index jumped 2.7% at the Tokyo Stock Exchange as it of course staged a comeback a day after the benchmark index tumbled 4.1% to settle at an 8-month high. Japanese data released before the market opened did little to dampen sentiment. Industrial production fell about 0.5% on the month. In August, government data showed, missing of course expectations of a rise of 1%. The second consecutive drop in industrial production suggests that Japan's economy shrank yet again in the quarter that ends today. Additional easing by the Bank of Japan next month looks all but inevitable, as demand for the safe haven yen, however, eased early on Wednesday as global stocks steadied, as of course month-end and quarter-end flows mean that volatility is likely to remain slightly subdued. The dollar fetched about 119.86 yen, having turned around from a low of 119.24. Traders are also likely to eye the release of China's Purchasing Managers Index on Thursday, as that will shed light on the state of the country's all-important manufacturing sector. Moving to Europe, over there the stocks opened higher on Wednesday following a positive lead from Asia overnight and of course Wall Street on Tuesday. The pan-European STOXX 600 index bounced out of the gates, up 1.7% at the open. Europe looks set to follow Asia stocks, which largely advanced on Wednesday, recovering from the carnage in the previous session. Commodities will also remain in the focus for investors in Europe, however, with the mining and oil sector a cause of concern. On the data front, the Eurozone unemployment data for August and of course flash inflation figures for September are due today. Against the greenback, the common currency slightly advanced at 1.12. 45, that was slightly off the high of 12.82. Elsewhere in Europe, house price growth in UK accelerated in September according to Nationwide Building Society, increasing the risk of unsustainable pickup in the market. Prices rose an annual 3.8%, up from 3.2% in August, the lender said in the statement on Wednesday. On a monthly basis, however, values increased about 0.5%, the most since April. All of this is fueling concerns about the timing of rate hike in the UK. In result, we saw the pound sliding lower versus the dollar to 1.5130. Gold in the commodity sector continued losses a fourth day and of course was headed for its worst quarter in a year on a looming US rate hike. Gold could see more losses this week as of course top consumer China heads for a week-long holiday on Thursday, removing a key support on prices during Asian trading hours. Traders will be eyeing a speech by Federal Chair Janet Yellen, of course, later on Wednesday, and a private employment report clues about the economy and timing of rate hike. Gold fell 0.2% to 1123.90 in early European trade, breaching successfully the support level of 1125. And of course, we're looking at the next major support that lies around 1115. Crude oil futures fell also in Asia trade on Wednesday after U.S. inventories showed a weekly buildup that far exceeded analysts' expectations. The American Petroleum Institute said later on Tuesday that U.S. crude oil stockpiles rose by 4.6 million barrels to 457.8 million barrels in the week that ended September 25. Front month U.S. crude had dropped 51 cents or more than 1% to 44.72 a barrel by early today. The contract settled Tuesday's trade at 45.23 a barrel, up 80 cents or 1.8% on the day. The US government's Energy Information Administration, however, will issue official weekly inventory report later today. And for the most important data today in the calendar, we're looking at the 9 a.m. unemployment rate and CPI index for Eurozone, followed by 12:15 ADP employment change for US, and later Fed Chair Janet Yellen will have a speech around 19. That's all for today. Stay tuned, and of course, for traders and investors, keep an eye on the calendar. That's all for today. See you next time. Bye-bye.